Hi folks, Scott here, and this is the wrap for Monday, November 11th. Happy Veterans Day to all of you who served the United States military, or any free country for that matter. Thank you for your services. I am proud to be a veteran, even though I only served 5 years. I did serve, and I'm proud of that, because without folks that serve, we wouldn't have free countries. And without free countries, we wouldn't have free markets. And without free markets, you'd be doing something else right now, and I'd be doing something else right now, probably less enjoyable than we're doing. So with that said, hats off to everyone, and thank you for your service. Be sure to thank a veteran. All right, today was a whole lot of nothing, frankly, and not real surprising either. You'll see in my pre-market comments, with the bond markets closed off and the equity markets slowed down to a grind, and they did today. Not much setting up going into tomorrow, but I thought it'd be interesting to show you the results of fading gaps after a 5-day high close. This is actually a 9-day high close, believe it or not. But not a 10-day high close. So 5-day high close, not a 10-day high close, and closing above the 10 and 200-day moving averages. And there you go. It shows a slight long bias in terms of gap direction tomorrow, about 20% greater chance of gapping up following this unique pattern. And the end of day odds favor going long more so than shorting. They're both pretty efficient historically, meaning they've lost about the same amount of money that they've made, but clearly better chance of filling the gap on a down gap historically following this pattern than an up gap, even though an up gap doesn't look bad. As always, I'm going to defer to our gap guys before I make my final decision on this, but on the surface it looks like maybe we have a consolidation day tomorrow. I don't know. At least in the morning, it looks like odds of gap fill are favored, though it does appear odds could be a little bit more elevated if we gap up and break out of this range tomorrow, which logically would make sense. I'll have to think about how to test that, because pressure is definitely building for a possible break higher, and I think it would catch some shorts off guard and be a riskier than normal short if we happen to gap up tomorrow out of this range. So a little food for thought. Now today I'll show you the gap guys just super quickly. Actually, I'll show you the worksheet. I'm not going to show the gap guides because we didn't end up with much to show, frankly. It was basically a neutral setup. Most indices gapped down today. It was just a dead neutral setup to fade a gap on opening between the close and the low. Now our gap zones, as you've probably heard about if you're new, or there are actually 10 of them, but they organize it to 4 different opening areas. So the weighted average of all of them, large number of trades, just a neutral setup of fading the gap using our intraday MTG stops. Now post monthly jobs report has shown some risk historically for down gaps. Same with after an inside day, but that was countered in large part by being a 10-day moving average up straddle, where you often have bulls. And this is defined down here, closed above the 10-day moving average after closing below it the prior session. So just pretty much a neutral overall setup, not worth trading, and as it turned out, there wasn't much of a gap at all. In fact, I'll show you my pre-market comments. See, last night's video favored, or Friday's video favored gap fill as well. Neutral to slightly weak. Fading gaps in either direction today. And I know just now I just said mostly neutral. It was neutral because mostly neutral. By the time we actually opened, there wasn't much of a gap. So just a tick or two, depending upon the market. So, bond markets closed for Veterans Day. The equity markets could trade more lightly today. That was an understatement. No clear edge and small gaps. I'll stand aside and be highly selective, i.e. cautious, with trading the range too. And as it turned out, I'm not even sure we broke any ranges. Let me see here. We broke the 15-minute range to the high side. Did not show a clear edge whatsoever. I did not trade it to the high side. And we never broke the first hour high range, which are these yellow bands there. Like it looks like the Russell did a little bit midday. That's a dangerous time. Middle of the day is a dangerous time to go long on any range breakout. And nothing in the NASDAQ, nothing in Dow. Just a real muted day. So tomorrow's going to show up on our worksheet that I just showed you. It'll show up classified as an NR7 day, most narrow range day of the past 7. That's a Toby Crable term. And I'll show you the data for that in my pre-market, or that'll be in the worksheet in about an hour actually. about 6 p.m. Eastern time. That's posted 5:45 p.m. actually, and then we're breaking down tomorrow, see what happens in the overnight session. But not much to talk about today, so I'm going to get on with my day and go have a Veterans Day dinner with my family. Take care. Have a good one.